Oil prices enjoying a nice rest after the big decline we saw at the end of 2018, and then actually the nice appreciation we've seen year to date, up about 15% after that big decline. So right now we're kind of hovering in the mid 50s, looking probably for the market to give us some kind of a clue, whether it be global growth issues, whether it be supply and demand issues coming out of OPEC. We've also got Venezuela throwing in their hat into the oil game again and making front page news. So right now we're kind of in the middle of the range. Sounds very similar to what we've seen in a lot of other major commodities, whether it be treasuries, whether it be gold. We've kind of been hovering in these ranges, kind of waiting for some kind of catalyst moment to occur as volatility remains elevated, although not exceedingly high across the board as well. Markets are being very cautious here, I think, and that's why we're seeing oil hover right in that mid 50s range of which we've been at for about 2 weeks. And if you look at what's happening with the dollar has been on a trip. It was down, it was up, it was down, and it was up strong. We saw a nice pullback yesterday, followed by an extension higher today. And it really hasn't been something that oil's been paying a whole lot of attention to. Yes, dollar-based commodities will trade adversely to the dollar. However, as we've seen in gold and we're seeing in oil, it doesn't happen every day, and it certainly isn't happening now when we see the dollar spike higher and oil kind of trades sideways. It's just kind of a disconnect, and we've seen that over the last couple of years, given, I think, the whole going back to the zero interest rate policy set by the central banks back in 2008 and 2009, that has really kind of separated the currency trade from a lot of these commodities, and that's what we're seeing now. So right now, oil not really trading off the dollar, although it is trading sideways when the dollar has strength. Lastly, let's talk about Davos, because Davos has been in the news all week. Obviously, the big economic, political, whatever you want to call it, meeting in Switzerland. They right now are talking about major concerns over global growth. That will adversely affect oil prices dramatically, because obviously the more higher expectations for growth we see globally, the higher oil prices will go. And I think that right now that connection between the two is such that we're seeing a stalled trade in oil prices. Perhaps we're out of the Middle East, we'll see some more production cuts. Perhaps there will be some issues out of Venezuela, which may have some concerns which maybe aren't being fully priced in. They could actually start to see prices go up as well. However, right now we're seeing a stall, and again, waiting for a catalyst moment. Could it be coming from the economic side, or could it be coming from the supply side? We have yet to be seen. But right now, prices are stagnant. They're waiting for that it moment, like we're seeing in treasuries, like we're seeing in gold, like we're seeing in other commodities, with the idea that if growth is going to be slow in 2019 or slower than expected, then everything else has to reprice. And right now, oil has repriced, but certainly we could see some downside if those growth numbers don't pick up, or expectations for those growth numbers in the second half of 2019 don't go up as well.